defensive picks. And today's countdown closer is a fan too. Let's bring in RNC Genter Capital Management CEO Dan Genter. You like IBM, Dan? Why?
Yeah, Lauren, I do. I mean, it's had a good move here, but even where it is right now, it's still fairly cheap. It's at about a 13.4 PE. Overall market's come back to 15, so it's still trading at a discount. It's got a great 4.7% yield while you wait. We're clearly seeing a new mainframe cycle that's coming into place, and so we expect earnings, at this PE level, will actually be up about 6 to 8%. So you're still getting in at a very reasonable price, good solid 7% cash flow, and yet again you get almost 5% in dividends while you wait this out. So it's certainly a good place, to park some money and good cash flow, and with still quite a bit of upside.
I want to talk about Lockheed Martin, but first, you mentioned earnings. We get into the big banks reporting next week, opening up the earnings season for us. Do you think Wall Street has taken into account the fact that earnings might be a lot worse than they guided for in general?
Well, look, Lauren, they're starting to hedge for it now, certainly, and they're waiting. That's the other shoe to fall. But look, you can hear it coming down the steps right now. And we don't think that they're fully adjusted. I mean, it's going to be very, very difficult for the S&P to come in at a 250 target, which is where it is right now. We think they're going to have to adjust down. Analysts don't like to make downward adjustments. Frankly, they have to admit that they're wrong. They know the effect it's going to be on the stock. And so they're going to wait until the last possible minute to do that. But I think it's just unavoidable. When you have a situation where cost of finance is going up and interest rates are following inflation, you're seeing consumption beginning to roll over. I mean, we're going to have an erosion of margins, and earnings are going to come down, and they're going to have to just step up to that.
And the call with the executives after the earnings release, that is going to be so important. Talk to me about why you like Lockheed Martin, Dan.
Well, again, it's just trading at a very, very good multiple right now. It's trading at a market P at 15.2, and this is despite the fact the stock's up 21% this year. So despite having a very big move, being in a very strong sector, only second really to energy this year, you have a company that's selling at a very reasonable multiple, 2.6% dividend yield, and we're going to have continued and increased commitments to defense. I mean, the threats that we have that are coming from overseas is not going to diminish anytime soon. So it's got a good, strong cash flow once again, and we think, again, you're just going to see probably about 2 points of multiple expansion as this market starts to find a base.
Can you do Medtronic in 10 seconds?
Sure. 3% yield, 15 PE. They had some miscues on their product cycle and timing, but we think that they'll recover from that.
Dan Genter, thank you for the speed and the bandwidth with all that. We got a lot in. We do appreciate it.